Guys, welcome to the Financial Summit Spaces. We have been missing for a while. It was all because of hectic schedules. Tone going to Maldives. That's going to be some story that we all want to hear. How was the resort? How did he like it? And how are we looking for the next Financial Summit? So, Tone, how was Maldives? Let's start off there.
The resort's great. It's gonna be really, really awesome. And yeah, the snorkeling around there was great. Literally, just go snorkel right off from the rooms. Was snorkeling. Had a couple of sharks come up next to me, but they're kind of harmless there, even though one of them was my size. But they don't bite, so that was fun. And no, it's great. Really, really awesome. Uh, Great snorkeling. The venue is going to be, food was really good. The conference room is awesome. The conference room has a pool, so people can go to the conference room in like bathing suit, can jump in the pool during the break. It's like right, the pool's right outside. It was gorgeous. It was really, really good. I can't wait to do another summit.
Or maybe we can have a conference while the person who's presenting can do the presentation, and we can all be in the pool. I don't mind that. A perfect way to enjoy some learning plus a little bit of fun. So, Tone, let's start off. So, guys, welcome to the Financial Summit Spaces. So, for people who are new and who might not know who we are, so the Financial Summit is an yearly event. Well, it is yearly, but this time around we are going to be a slight bit delayed by a few months, I think a couple of months, because this event is going to be special. This event is going to be held in Maldives in March 2025. And it's going to be 5 days of insane luxury, insane knowledge share amongst people of same domain as well as multiple other domains that you don't expect to be there, but then suddenly they come up and they share their ideas. So you'll have traders, hedge fund managers, money managers, you'll have VCs, you'll have companies coming through, new exchanges, old exchanges as well. Like BitGet has been our sponsor for the last two financial summits, so hopefully they come back. We had other option trading exchanges as well that came through this year. So a lot of those people, and then you'll have doctors, you'll have nutritionists, breath experts teaching you how to be healthy in your life. So a lot of different things happen over there. So if you haven't signed up, please do sign up. You can visit thefinancialsummit.com, sign up, reserve a space, and we will love to see you all there. So, Tone, well, let's get into it. It's been a while we have talked, right? The last time we talked, we were at 70,000. We went to 56.5. Is this the market bottom, Tone?
I think it is, but we still need a couple of more days. So it looks like a market bottom because the daily chart gave us a beautiful reversal hammer candle. It bounced pretty much off of the 128-day moving average, which I really, really like. Nice reversal candle. And then today's candle is just a continuation off of yesterday's daily MRI buy. This reminds me a lot of the reversal from 20,000 in March of 2023. But the similarity isn't as perfect. So on a weekly scale, we have not yet indicated a reversal. And my friend Matt McGregor's Alpha Numeric has also turned bearish. So the higher time frames are not yet fully bullish. Even my 4-day chart, the one that I use for my allocation, is not yet fully bullish. But from a daily perspective, this is very, very promising. 2 days ago on the Financial Summit YouTube channel, I stated that this is worth taking a shot at a short to intermediate term long trade, and this short to intermediate term long trade could turn into a longer long trade. But right now, it's still an intermediate long trade, and it's sitting right at resistance. The $63,000 area is resistance. And if we can break this area, then I'll be super bullish. I do need to see us sustain 65,000. And if we can sustain 65,000, I think then we're going to break out to new highs. But this is very, very promising.
Well, Tone, let me tell you this. I am more bullish at this point of time than I was at in January when we were basically creating the same kind of candle on the 22nd of Jan. I feel the market bottom was 56.5. I was like, I saw the chart, I saw what I had basically lined up. And I'll be very honest with you, I'm more bullish than I was like lower prices. Like for me, this thing is about to explode, like literally explosion this time around. It's not going to be like grind up slow steady. I think it is going to literally accelerate. It's going to be an acceleration of trend. That's my analysis. It could be completely wrong, but that's how I see it, because there was a massive so SMA 21 was sitting right there at 54. Above that was the super trend, bullish super trend. Above that was a massive volume gap which was sitting, and I was like, if this area stands, and we have been seeing, right, the weekly candles don't like, how do you see this? Because when I'm looking at the weekly candles right now, I'm seeing long wicks to the downside. That means there's a lot of buying pressure that's happening on the lower prices. How do you see these weekly candles? Because you're saying that the higher time frame has not turned bullish. What's your view on that?
Well, that's the thing. The weekly candles, to me, I'm just following the MRI, and the MRI has not flipped. And we're not going to get the green star candle for 2 more weeks. So, yeah, I mean, if this week continues to rise, I mean, maybe if it rises a lot over the weekend, we get the price flip this week, and we get the green star next week. That's possible, but more likely, we get the price flip next week and the green star the week after. So we got a long way to go on the technical picture. What is different this time a little bit, and why I may not be as bullish as you are, is the macro picture to me is a little bit concerning right now. The ETFs have been big net sellers. It doesn't look like there is crazy amount of uh, 1 second. The ETFs have not been generating a lot of buying. Meanwhile, GBTC continues to massively sell. I still think GBTC has a lot more to sell. Finally, I'm hearing rumors that Mt. Gox will finally start selling the Bitcoin. There is massive amount of consolidation of Bitcoin at OTC dealers, and that tends to show a little bit toppy markets until that is resolved. And so there's just a little rough spots. Also, this crackdown, Roger Ver getting arrested, more Lightning wallets, leaving the App Store in the USA. There's just a little too much downward pressure from the macro picture. Now, usually, bad news in the macro picture is not a big deal. I tend to look for these kinds of signs at the bottom of markets where people are super, super concerned about this kind of stuff. But in this case, we're at the top of the market, and a lot of people are kind of happy at these Bitcoin prices overall on average. I mean, yes, it's better to be at 75 than at 62, but there are enough people that have been waiting to sell in the 80s, in the 90s. And if these people are getting super overly concerned because of all of this trouble by the US regulators and law enforcement, that these people will just say, you know what, I'm happy at 64, 65. I don't need to wait for that 80. So I think it's going to be a little more consolidation. I think best case scenario is a consolidation between 60 and 70 for like 2 more months, and then the breakout. So I was also looking at that 55, 56 area for support, and we bounced off of it, which is great. But I'm not expecting us to go to 80 immediately. I hope I'm wrong, but that's kind of how I'm looking at it.
Yeah, no, I agree. I totally agree, Tone. Like consolidation is, so some people see consolidation as being bearish. They get like, they see it and they're like, oh my god, what's going on? Personally, for me, consolidation in a trend is always friend of the trend, because it gives it's giving the trend more
Can you say
power to
again?
whenever I'm saying that whenever there's a consolidation in a established trend, it's always good. So I'm quite happy with any sort of consolidation that happens here. So I do agree. So don't sticking to BTC, I really want to talk a
I
little bit
can't
about
hear you.
options.
I think I lost you guys. I gotta jump off.
Okay. Well, let Tone connect back. Guys, give him 2 minutes. Okay, he's connecting back, guys. Just 2 more minutes. That's it. Well, guys, by the way, today was the options expiry, and that was supposed to be my next question for Tone in regards of what really option expiries are, and the 61,000 mark that was being talked about as being a pain point. What really is, why is it a pain point? So that's something that I want to understand from Tone. So yeah, let's ask him that now. Tone, I have accepted your invite. Can you hear me now?
Yeah, I gotcha. Sorry,
Cool.
I had a bad connection and it dropped off. So, but
Oh,
I'm
that's
back.
fine.
So,
Yeah. So I was just saying, Tone, that consolidation in any established trend is always a friend of the trend, because it gives the trend a little bit power to kind of, whenever it wants to start the primary, it's always good for it. So quite happy with the consolidation of 2 months. Not a big problem for me. So Tone, today was the option expiry. It was not the major one. It was the minor options. Minor as in not the bigger one, the not the monthly one or the quarterly one. Uh, I wanted to ask you, number one, why is the max pain point in auctions expiry such a crucial thing? Number two, is the price always kind of attracted towards that price? Like, is it normal?
yeah, so the main reason why the price is attracted toward that price is because market makers that uh, sell a lot of options tend to have a reserve of the underlying stock, and they push the price of the underlying stock or the underlying asset into the underlying price, where the majority of the options go uh, unexercised, so that the writer of those options gets to profit at its maximum. Now, this doesn't always work, but when they are able to move the price, they can. Now, this is similar to what Pirate at 40 did with the price of Bitcoin throughout the entire year 2012. Uh, so I'm sure Joe Colasari knows this case very, very well. So in 2012, Trayvon Shavers used to lend out Bitcoin and used to like lend Bitcoin, and then he would charge you a percentage in Bitcoin when you have to pay the loan back in a week, in 2 weeks, in a month. And he would basically have this massive spreadsheet, and he would write down how much Bitcoin he gave a specific person, and he would tell that person what the price of Bitcoin is going to be a week later when that person has to pay back the loan. Now, how did he know what the price of Bitcoin is going to be a week later? Well, he had so much Bitcoin in reserve that he would push the price on exchanges into the price that he needed in order to get the loan paid back. And until in 2013, the market got away from him and he couldn't control the price anymore. But he was able to control the price for almost an entire year, more or less, in order to get his loans paid back. It is kind of similar with stocks and option expiration. If a company like Goldman Sachs or another big company uh, sell a lot of options, they have a bunch of stock in reserve, and they can sell that stock or buy more stock to try and push the price into that into the price that creates the most number of options going unexercised. So this is kind of normal. It's not manipulation. I mean, anyone can buy a stock and move the price, right? So I think that's the main reason why it happens.
Thank you. Welcome, Dr. Jeff. Welcome, Joe. It's been a while. Haven't spoken to you guys. How are you guys doing?
Doing great. Thanks for having me up. Good conversation.
Are people talking?
Well, yes.
Yes.
Oh, I can't hear anything. I have to come
Can
back.
you hear
Hang on one second.
anybody? Can you hear me?
I can hear you, Tone. That was
Okay.
about it.
Yeah, you gotta come back.
We can rejoin. So, Dr. Jeff, let's take your views on BTC price action in the last couple of weeks. To be honest, because we have not been here for 2 weeks now, so it would be great to know your thoughts on it.
Yeah, sure. Let's see. I would say that the way the price is acting currently is in line with past price action of past cycles around the halving and following the halving. And I think that the macro basically confirms it. It's sort of interesting, at least me looking back to 2016 and looking back to 2020, how similar the macro setups were at those different times. There obviously are variances, but there's also some pretty almost uncanny similarities. I heard some of what Tone was saying, and I think I generally agree with him. I'm not bearish right now. In fact, I think that most of the bearish move has been priced in, and I think that it was kind of confirmed by the soft pivot by the Fed on Wednesday. For those of you who are paying attention, basically what they did is they pivoted from the amount of QT, so the runoff off of their balance sheet, and they actually are going to slow it down as of June 1st. And to me, that kind of marked an important shift. It's not significant, but it's enough that momentum can change. And when things go from bad to less bad, sometimes risk assets can pick that up, and Bitcoin definitely picks up on those kind of trends. So that prevents me from being overly bearish. I still, and I hate to say it, after 12 months or more, I'm still bull crabbish, meaning that I still think the most likely action from here is to continue to chop sideways. Because we've gone down so far from the highs. I think my calculations were we went down 23.5% from the intraday high back in March. That could be enough. And so if I kind of combine where we are with macro and look at past cycles, I wouldn't be surprised if we sort of chop sideways, maybe a little bit higher, kind of in the 60K range for weeks and maybe even for months. I wouldn't be surprised if we're all back here in July or maybe even August, and we're still kind of around the same price, and everybody's getting kind of bored and people are giving up on Bitcoin. I threw out months ago that I think Michael Jackson's birthday is when the fun is going to start again, and I'm still kind of holding to that. For those of you who don't know, it's August 29th. I wouldn't be surprised if around that time things start picking up, and as we head into the late fall and early winter, so late 2024, basically. That's still what I have targeted for. Things are starting to get excited at that point. So I just continue to tell people, who knows what none of us can predict the future, right? But if you want to look at what the macro's doing and look at past cycles, I would say this is kind of the last great opportunity to really get on board and to load up Bitcoin on the cheap. I think personally, again, I've been saying this for about a year now. Anything below 70K, I think, if you have more than like a 3-year time horizon, if you can get Bitcoin below 70,000, which is obviously where we are right now, I think that's a great price. So personally, I'm doing what I can to stack at these levels. We may have months to stack, but then I think once the opportunity is gone, I think it's gone, and I don't know that we're going to get back to these levels probably ever again. That's kind of how I'm looking at it. So I see Joe up on stage. Love to hear what Joe has to say, and if Tone has any comments on this too.
Joe?
Yeah, go ahead,
Yeah.
Joe.
So do you want to talk about just the Bitcoin market or just the interest rates, or what's the focus?
We're starting off with Bitcoin, Joe. We have a lot of time and 2 weeks to cover, so don't worry. We'll talk about everything
great.
you want to.
Okay, excellent. So You know, I again, I wish I long for the days where we used to disagree about something because I feel like it's repetitive. But I really I agree with Dr. Jeff. I actually think this summer is going to be pretty boring, to be quite honest, for a variety of reasons. We can get into it in the macro discussion, but I think Bitcoin is going to be choppy, and I think you got a ceiling in the high 60s and a floor, you know, say in the high if you get it 49 50 range. I don't think you break that. That's just my view. I think we're kind of going to frustrate quite a bit of people this entire summer, the bears and the bulls, who are pricing in, you know, in leverage moves, extreme outcomes, either to the upside or the downside. And it's going to frustrate a lot of people. And people are going to get bored and sick of Bitcoin. I can already sense it right now. They want it to, you know, it's like that old meme with the stick, do something, you know, stop sitting in this range. You know, we had an epic move, right, in advance of the ETFs. It wasn't really a sell the news event, but it was kind of, you know, the fun is over for a little bit type event, right, where we kind of sit and consolidate. And you know, a lot of us talked about this. You know, the markets move in advance of the actual events that occur, and I think stuff does get priced in, contrary to popular belief. And from the folks that I'm talking to on an almost daily basis, the real exposure from the institutional side into Bitcoin, I think, comes in the very end of this year and in the early part of next year. There are so many different conferences, and there's a position paper from a major institution that's going to be put out to all of their institutional clients. They're trying to publish this, guys, by the end of Q3. Okay, and then it'll start being, you know, distributed to people, and talking points are going to be distributed, you know, into the end of the year. And you know, obviously, you've got an election in there. I tend to think that you're going to see quite a bit of jittery folks in advance of this election for a variety of reasons we can get into. Tony and I still have to have our longer discussion about American politics. That's not an economic discussion, but I think that would be fun. And then, you know, I think that you have to look at, with respect to the market right here, is that you still have this continued concern with respect to inflation, which we can get into. I don't think it's fully resolved. I still think we're stuck in the last sort of hurrah of trying to get that inflation target even closer to 2, which I don't believe we get it this year. So you got a lid, you got a ceiling on all assets, and I don't think it's a coincidence. I posted this the other day that, you know, it's like there's one trade, right? Bitcoin was selling off, Nasdaq was selling off, S&P was selling off. They all top within a week or so of one another, and then they all sort of found this recent bottom here, and they've all rallied since. To me, that doesn't really. I mean, you're not seeing a distinction across asset classes. So for the folks that are looking at Bitcoin without a broader context of, you know, risk assets, I think you're missing the forest of the trees. I think you have to focus on the overall macro liquidity picture, which is telling you very clearly things aren't terrible, but they aren't spectacular, right? Which is, you know, it's a fine place to be. It's a fine place for dollar cost averaging. Take it and don't waste it just because there's not a roaring bull market. Don't waste the chance to expand your position.
Well, thank you, Joe. Welcome, Matt. How are you doing?
Hey, great, good. Yeah, I
Good.
find
Good.
myself nodding along to a lot of Joe's points.
Well, that's great. So, okay, let's elaborate a little bit, because I'm the only, you know, degen bull right now in this nice club of very, very smart people. So, you are saying that we are going to consolidate in this region from 60 to, let's say, higher 60s to higher 40s, the $20,000 range, give or take. So how I'm seeing it, we have seen ETF flows go bad. We could not dip, right? The ETF flows were not really great for the last 7 days. We still held up pretty well. ETF flows are going to get better. Hong Kong ETFs got approved. Very, very bad volume in the first few days. But there were some contradictory reports regarding that volume as well, that volume was the sum of the worldwide volume at that point of time. But I am not yet sure what exactly it was. So I would really want to pick up your thoughts on that tone, that Hong Kong ETF volume that was initially reported to be 11 or 13 million, I think. And the next day, the reports came out that the volume was that volume was basically the worldwide accumulative volume. And the real volume was around $240 million. Do you have any insight into that?
I don't, but I didn't expect anything to come out from the Hong Kong ETF. I I didn't see it as a huge bullish catalyst for the markets. Like Hong Kong markets used to really, really mean something, but I'm not sure what they mean anymore because the way Hong Kong locked down during the COVID stuff, a lot of Westerners left Hong Kong. China is slowly taking over Hong Kong. China has their own markets, so the Chinese don't invest in the Hong Kong markets all that much. And I think Westerners are starting to stay away from the Hong Kong market. So I didn't think the Hong Kong ETF was going to be all that relevant. What I'm finding more relevant is I'm looking at the numbers. Fidelity sold 3,000 Bitcoin yesterday, which is kind of strange. Not yesterday, sorry. On Wednesday the 1st, Fidelity sold 3,000 Bitcoin. So a lot of panicky people dumped the Bitcoin ETFs. Now, Grayscale sells Bitcoin every day, and that Bitcoin isn't coming back to Grayscale. So I think as long as GBTC is selling, 1,000 Bitcoin per day, we're gonna struggle here. And I'm hoping that they just keep selling 3,000 to 4,000 per day, so that by the end of the summer they don't have much more Bitcoin to sell. And at that point, I can definitely see lots of buying pressure going forward. I see Joe's got his hand up. I'm gonna hand it off to Joe. I just want to do a quick shout out to Gary Cardone. I heard you drop my name over at during a Kitco interview. That was great. At the moment, you can find me in Panama or Miami most of the time when I'm not traveling. So one of those two cities. All right, Joe, off to you.
Okay, so I don't think, and I agree with everything you said, but one comment. I don't believe that the ETFs selling Bitcoin is a result of panicky ETF buyers. Just to explain the mechanics of how this works. Sellers. Sorry. Panicky ETF sellers, okay? That's not how the mechanics work in my view. So the way it works is if you have a leveraged position, okay, if you're trading these perps abroad or derivative positions abroad and the Bitcoin price is selling off, the way the ETF structure works is it's designed to bring the shares back to NAV. So they become forced sellers of Bitcoin to bring the shares back to NAV. That's how you bring the shares back to NAV, by selling and liquidating the Bitcoin. So if the leverage players in the market are getting knocked out, the ETF has to sell. Repeat, it has to sell to bring the shares back to NAV. That's the only way you do it. So it's not like a bunch of people are saying, oh, the flows are coming out because we decided we don't believe in long-term exposure. And this is no different than many ETFs in the market, the SPY ETF, the VU ETF. They have to sell when the leveraged options positions you talked about earlier, when those market makers are pushing down the price, they have to sell. Even if the actual holders are not selling, the internals, the companies, the shares that the ETF structures are holding, they have to sell. So I don't think you should read it as the fact that the ETFs are seeing outflows, that suddenly institutional demand is drying up. It's a mechanical selling feature that just works. That's how ETFs work.
So you're trying to say that...
Yeah, go ahead.
So sorry, Tone. So, Joe, you're trying to say that the whole selling is not really people selling off the stocks or whatever ETF holdings they have. It's the natural structure of the ETF that forces them to sell?
Correct. That's how an ETF works. That's how they keep the small discount to NAV or the small premium to NAV. I don't know where people got this notion that money enters an ETF and it never leaves. I don't know where this is like a strange, I think, hangover from the closed-end trust, the GBTC, where, that in those days when people bought Bitcoin, when GBTC bought Bitcoin before its conversion, it stuck there, right? It was like a Hotel California. The Bitcoin went into the trust, it never left, only for fees. That's a totally different structure than an ETF. It goes both ways. And I think it's really confusing to me where this thing came over Twitter that it'll always stay in there and never sell.
It's the same, Joe. It's the same people who think that it's literally Larry Fink buying it on behalf of BlackRock and not customers of BlackRock, or literally Barry Silbert who's selling it in GBTC and not customers of GBTC that are fleeing.
A lot of people actually do think that BlackRock is buying all this Bitcoin for themselves, which is insane. But Joe, no, I agree with what you said, but also you said this doesn't have to be the result of people selling the underlying asset. That's true, but it could also be the result of people selling the underlying asset, right? This is how if
the ETF selling the ETF.
Yeah, the ETF. Right. So if a bunch of people are selling the ETF and there's not enough buyers stepping up, and the ETF is starting to trade at a discount, then the parent company, which is Fidelity, has to sell Bitcoin on the open market to bring it back to NAV, right? So yes, both things could be true, what I said and what you said.
Yeah, but it's almost like I can't understand why people breathlessly watch if BlackRock or Fidelity report an outflow for the day or an inflow for the day. Like you're literally watching the daily Bitcoin candle already. If it's a massive green candle, guess what? Probably inflows. If it's a massive red candle, guess what? Probably outflows. It's like, it's like staring at the ground, waiting to see if puddles form when it's literally raining on your head.
No, Matt, the thing is, like, you get bored at looking at just the Bitcoin chart, so you basically have some other metrics to look at. It's just to pass time, I think, most of the times.
That's the thing, right?
There's literally a cause and effect. It's not some like odd correlation, like, that's an interesting pattern. No, it's a cause and effect.
No,
Yeah,
but I still find it very, very interesting. And here's why. Here's why I find it very, very interesting. On May 1st, BlackRock, which is a much bigger ETF than Fidelity, even though Fidelity is a second, let's remove Grayscale from the equation. BlackRock sold 630. Fidelity sold over 3,000. That's a pretty big difference there. Okay, to me, that is very, very interesting how Fidelity, which has a lot less Bitcoin than BlackRock, sold 5 times more Bitcoin. Okay, that's one reason. The other reason I constantly keep an eye on this every single day is I want to know when Grayscale will finally stop selling the Bitcoin, right? There has not been a single day where Grayscale had a positive inflow. I don't think they're going to have a positive inflow. But if they do have even a single day with positive inflow, that tells me that we've probably bottomed on GBTC mass outflow selling and conversions into other ETFs. So I still like looking at it almost daily, and I keep track of it weekly. But yes, it's supposed to correlate with what the price of Bitcoin does. But I, as a math person and chart pattern person, I want to see if if the ratios make sense or if there's anomalies. So to me, there's still relevance in looking at the data.
Nice.
They're cannibalizing their own ETF. They're trying to cannibalize. Yeah. I mean, that's why they're launching BTC. So the Grayscale is on a slow walk to the graveyard, right? The GBTC. That's where it is. It's like Bcash. It'll like never die, but it'll continue to have outflows.
So, yep. Dr. Jeff, any input from you on this whole conversation? You were basically on mute, so I just want to bring you in on that.
Yeah, my only 2 cents or 2 sats on this is that I continue to believe that people are making way too big of a deal about the spot Bitcoin ETFs. They are not what moves the market. They are a small fraction of the market, and people get so confused by the flows of these things. This is not to negate anything Tone is saying. Tone, he's making great points. And like Tone, I'll be very happy if Grayscale goes to zero. Like they've been, I think, not great actors in this space. So I like watching the outflows, and I hope they continue for a long time out of Grayscale. But people get so caught up in the narrative, right, that these spot Bitcoin ETFs are just changing the world and they're going to drive Bitcoin to 1 million and all this stuff. And I just think it's nonsense. And people have to don't lose the forest for the trees. Like, focus on what is actually happening. The spot Bitcoin ETFs are great, but they are not what drives the market. So anyways, I'm kind of glad. And I think to Joe's point, a little while ago, I do believe, like Joe, that we're going to see these spring and summer doldrums, that it's going to be this choppy, boring price action. And what I'm most excited about is that I think people are actually going to stop talking about the spot Bitcoin ETFs for a while. And I can't wait for that. So I'm looking forward to the summer doldrums. I'm going to be sitting on my porch drinking some lemonade, stacking sats, and enjoying the lack of coverage of spot Bitcoin ETFs.
Perfect. I hope it's that sunny in London that I can do the same thing. But yeah, it never gets sunny over here. Dr. Jeff, I also want to basically, I saw one of your tweet. I think it was from mid-April sometime when we started doing that started this secondary downtrend. And you said that there was a 10% correction, 20% correction, 30% correction, 40%. I think two of them have already come true. And you changed the emojis as well to the tick mark. Are you expecting the 30 and 40 to come true as well and the emojis to be changed there? Dr. Jeff, that one's for you.
Yeah, you're still muted.
I think he disconnected.
I don't think he can't hear. You know, by the way, you know when the ETFs are going to be really, can I make a quick comment here? You know when the ETFs are going to be really, really impactful? They're going to be super impactful when Bitcoin is in a raging bull market in the six-figure range and everybody and their mother is talking about it. And then anybody without any friction can just press a button in their ETF and buy it. That is going to be a game changer at the height of a bull market. Right now, you know, there's very tepid retail interest.
Yeah, I totally agree. I always thought of the spot Bitcoin ETFs as raising the glass ceiling, but for us to see more of that effect in 2025 at hopefully peak froth of a raging bull market and less so today here now.
I think we have Dr. Jeff back. Can you hear me, Dr. Jeff? He's back to listeners. Hopefully he'll rejoin. So, all right, let's move on. Dr. Jeff, oh yeah, he's here. So I was asking about, yeah, we can hear you now. I was asking about your tweet about the 10%, 20%, 30%, and 40% correction. Do you think the remaining 30 and 40% correction emojis are going to be changed as well?
It's a good question. I'm really glad you asked this because when I post things like that, sorry, by the way, so I was having technical issues before, so we're back now. I post those things not because I'm making predictions. I'm posting them because they're probabilities, and they're probabilities based on past cycles and what the current macro conditions are like. So am I predicting that it's going to go down 40% from the high, which would put, with the high of 73,000, a little over that, a 40% drawdown would be about 44,000. It could happen, but I think it's pretty improbable. And I definitely think it's more improbable at this point. Again, like Joe was saying, and again, Joe and I, you know, we've been agreeing with each other for like what, Joe, a year straight, 18 months straight, which is getting kind of annoying. We got to find something to disagree on. But you know, I tend to think we're just going to chop sideways here, you know, between about 50K and 70K for probably several weeks, if not several months. And so that means it could go down, I think, to, you know, 50K maybe. It could go below 50K. It's possible. I don't think it's highly probable, though. So again, I'm glad you brought it up. I don't think it's likely that it's going to do it. The reason I post that is based on past cycles. And what I think our current cycle is most closely following, actually, is the 2016 cycle. That cycle, it peaked a few weeks before the halving, and then we just had this steady decline of the price of Bitcoin for several weeks, and it actually dropped 40% from the high. So that's where I come up with that 40% number. That's what would put us, if we had an equivalent, you know, equivalent action this time around, it would put us at about 44K sometime in the next couple of weeks. Again, it's not, I'm just saying history rhymes. It definitely doesn't repeat. But just based on these macro cycles, you know, if we get a slew of bad news and if we get more, you know, government actions against, you know, Bitcoin privacy entities and other sorts of things, and people get really scared, I think it's possible that we could go down into the low 50s. But, you know, I'm not betting on it. It's very possible. And I know people don't like these wishy-washy answers, but like I said at the beginning of this space, I do think it was a significant pivot. What happened, what Powell said, and what's going on with the Fed. I think starting June 1st, where they're taking less treasuries off of their balance sheet. That's still technically tightening, but it's basically from tightening to less tightening. And markets are very sensitive to those kinds of actions. They've been in cruise control for a very long time, and now they're letting off the gas a little bit. So personally, I think that is incrementally dovish, and I think that could be why it's possible that Bitcoin doesn't go much lower than the price low that we've already seen. The bottom may be in, a local bottom may be in. But again, my last thing I would say, I would caution people to not get overly optimistic. There's all these moon boys on here that I'm friends with, and they keep talking about all-time highs, and they keep talking about how the Hong Kong ETFs, we're going to a new high by the end of the week. We're going to 100K. You know, they keep saying all this stuff, and I just think they're on crack. They're so crazy. Like, quit saying stuff like that. And not because I don't love the hopium, right? I love hopium as much as anybody. But what it does is it sets unrealistic expectations for people who are new to this space. So they come in and they put their whole paycheck into Bitcoin because they were told by somebody who's really smart and prominent in the Bitcoin space that it's going to 100K next week. And I would just really caution people to not do that and to just understand that you actually have an effect on people when you say that. So anyways.
Yeah, and you know what they do, Jeff? When you don't get 100K next week, then they turn to the shitcoins and they start gambling. That's what happens.
Right. It's crazy.
Yep.
I can't believe it.
But so true. I mean, then you're left with trying to explain that nothing's wrong with Bitcoin, that there was never supposed to be some sort of guarantee of 100K before halving day. It's a neat rhyme, but it doesn't mean anything in reality. And who are you fighting against? It's so frustrating. You're fighting against quote unquote Bitcoin OGs that have been here a decade plus. So, good luck with that.
Well, 100K is a low target, guys. By
halving day, I don't think you can rewind time.
No. How I see it is, if I was a moon boy, I would say $1 million. That's where I see Bitcoin one day. So if I had a Twitter account which had like 100,000 followers or something, and I was a moon boy, it's $1 million. But
that's the problem. You said by one day. That's the problem. These people are saying by halving day.
By like next week. Right. So
exactly.
Yeah, I've seen those accounts. Trust me, it's weird to see them. So, Tone, coming to you now, we have some Bitcoin OGs here. Yes, but yes, there are other cryptos in this world, but there's a metrics, right? Bitcoin dominance. Bitcoin dominance has been showing strength, like irrespective of what's happening with the price. It's been pretty strong. How do you see the chart? What are you looking at in the chart? Where do you think Bitcoin dominance is going to head next? Ron, can you hear me?
Sorry, I was on mute. I was opening the Bitcoin dominance chart since I'm in front of a laptop now. And we just peaked. We peaked a few weeks ago at 56% for Bitcoin dominance. That was the highest Bitcoin dominance since 2021. 2021 saw a huge collapse in a Bitcoin dominance. And I mean, I think Bitcoin dominance will do well. I mean, as I'm not sure what is keeping Bitcoin dominance so low. I mean, Solana and Binance Coin are basically the only two that have been rallying. Everything else has been pretty much dropping against Bitcoin. The latest crazy shitcoiny stuff seems to be happening on Bitcoin with runes and some of the other stuff that's coming in. I mean, it's not good for Bitcoin, but at least if it's happening on Bitcoin, it does drive more speculation into Bitcoin. More people are talking about Bitcoin. And I think Bitcoin dominance will rise, but I got to be honest, it's a metric I really don't care about. I don't see this metric as being very relevant. I just care that Bitcoin is rising against every individual shitcoin on a longer term time scale. And the only two that are kind of buckling this trend right now are Binance Coin and just Binance and Solana. I don't think there's anything else. Ethereum's been going down for years. So has the rest of them that we've heard of. I mean, something new could be out that could be rallying against Bitcoin, but we want to. I'm only talking about tokens that have been around for at least 5 years, and tokens that have been around for at least 5 years. And I'm not even sure Solana has been around 5 years, maybe close. I'm checking it now. Solana has been around 4 years, and okay, so let's use 4 years as a metric. It's Solana and Binance are the only two that show signs for potential all-time highs against Bitcoin in the near future. everything else is going down. And that's the metric I really care about, not in aggregate, because you can create 1,000 new shitcoins tomorrow.
Matt, you want to add in on that?
The big one that makes Bitcoin dominance such a noisy, problematic metric is stablecoins. And stablecoins like Tether, etc., those market caps have been up only, and they can keep going up as emerging markets have a incredible dollar thirst. So and it doesn't have anything to do with Bitcoin or not. So that can make that metric really noisy.
Yeah, so that's another issue. Like this is another reason why I don't look at Bitcoin dominance, because I didn't make the formula and I have no idea what's in the formula. And Matt's right. Like if that formula contains Tether, then that Bitcoin dominance is totally useless. It's completely irrelevant. Like you can't have stable coins in your Bitcoin dominance chart because Tether is a representation of the US dollar. It makes no sense at all. And I would scale these things by tradable market cap, basically, and I would only use, say, top 20 against whatever the top 20 is, and that's Bitcoin dominance against top 20. Because, like I said, you can create a bunch of shitcoins, and not only top 20, it's top 20 with a specific tradable volume, like average daily trading volume. Like back when I used to trade stocks, I had a cutoff switch. That cutoff switch was 500,000 shares of average daily volume traded. If a stock didn't meet that threshold, I wouldn't trade it. It was that simple. And the stock price had to be above $5. I didn't like trading penny stocks. So back when I used to actively trade stocks, the stock had to be above $5, and it had to have 500,000 shares of average trading volume. It should be the same thing here. There should be some kind of threshold for that, and absolutely no stable coins in that metric. And by that metric, I think Bitcoin should be significantly higher.
Makes sense. So, that was some in-depth discussion about Bitcoin dominance, and ETF flows. Moving on to yesterday's earnings. Like Coinbase came out with their earnings, guys, and that was a massive beat. They obviously, their expenses haven't gone up, but they have explained it pretty well in their call. They basically talked about their expenses are going up because the trading volume is increasing, and since they cannot preempt the trading volume that's going to come in, they cannot preempt how much more expenses they can have over that. And obviously their layer 2, that is Base, has been doing pretty well because of all the shit coins in the world getting onto that Base layer for some apparent reason. Things which I can't even name are on that chain. But there was a very, very good discussion in their earnings call too, and I was listening to it yesterday. Them talking about Base becoming the new Ripple, in my words, okay? That's how I understood it. So they are basically converting Base in such a way that they are able to do international transactions on the Base layer in normal currencies. Like they are not just talking about cryptos. They're talking about, we want to do USD to Euro conversions on the Base layer. And that's what their plan is for the upcoming future. So, Tone, is Coinbase earnings having such a major beat? Again, last time we discussed this, remember I think it was in January or December, I can't remember exact date. But we said that it will be interesting to see this time's earning, and their net flow for institutional is basically, I think, up around 67 or 70% from all-time highs of December. So they have increased that, and we all knew this is going to happen. So what's your take on Coinbase earnings, starting with Tone and then Dr. Jeff? You're muted, Tone.
So it's interesting. I didn't pay attention to the Coinbase earnings, but they crushed earnings. But the stock is only up 6%, which is nothing. It popped Thursday, and it actually dropped today. And the stock is still lower than it was earlier in April. It was higher on April 23rd. It was higher on April 26th. So this great earnings beat is not really stimulating active portfolio managers that Coinbase is, a stock to be in. So I'm going to stick to the consensus. It's not like what happened in Apple and the way Apple bounced, or what happened with Tesla on its earnings. I'm going to stick with the consensus of professional money managers and say this earnings beat is not all that impressive, even though it looks impressive on paper.
Okay, Dr. Jeff.
Oh, I see he's connecting.
Matt, you want to come in first till Dr. Jeff is coming back?
Yeah, I can help us pinpoint the why. So Coinbase, yes, they did have a good quarter, but their massive earnings beat is mostly because they implemented FASB accounting rules, which, as we all know, we've talked about many times. It's a neat accounting trick, but it's also kind of a one-trick pony. Like, you can flip that light switch, and it looks like on paper you had a massive beat on for the next quarter, but then you're in the new accounting rules, so you can't expect those eye-popping numbers next quarter and the quarter after that. It's kind of a one-trick pony, and I'm guessing that smart money, who, like, quite frankly, regardless if you're using FASB accounting or not, smart money was adding up, the number of Bitcoin that Michael Saylor has on MicroStrategy anyway, and they're adding up the number of assets under management and the Bitcoin that Coinbase owns. So, like, they were figuring out it manually anyway without FASB accounting. So I'm guessing that's why the pop was modest, but on paper the earnings beat looks massive.
Well, that's good to know. I mean, they were talking about moving some of the finances over from how the other section to some different sections as well. So I was hearing that, but well, I'm not an accountant, so I could not get that. So thanks a lot for clarifying that, Matt. Then going on to Apple. Apple had a real pop. That pop we all understand. So yeah, people are interested in Apple. Again, a beat, minor beat, not such a major beat, but the big news was the $110 billion buyback. Now that amount itself is bigger than a lot of the companies in S&P 500. And on paper, that's the biggest buyback in history. So Tone, Apple has pivoted away in this quarter from their AI, from their robotics car, and they stopped the whole project. And they are saying that we are going to be pivoting more towards AI. They are intending to come out with news in the coming 2 weeks about their new projects that they're concentrating on in the AI department, which will most likely give us more information. But how do you see Apple on the chart also from the earnings?
Yeah, so Apple is very hard for me to analyze. It had great earnings. It pulled back during the day. Apple is now halfway back to its all-time high. Apple was up 6% today, but for Apple, that's actually a lot. That gap was massive. And I don't know, like, I'm not a Mac user. I don't use Macs. I don't use iPhones. I think they are unusable devices. I don't understand how half the world uses these things. I would never use computers again if I was forced to use a Mac the rest of my life. And because of that, it's a very hard company for me personally to analyze. From a TA perspective, the chart is now completely bullish, but I don't know what it means. I don't know what these earnings mean, right? Like, yes, they beat earnings, but if I look at the numbers, I mean, they're not that impressive. It must have been something they said. Like, the numbers, they barely beat. Facebook beat numbers by a wider margin than Apple did, and Facebook stock fell like 10% on their earnings. And they beat by a bigger percentage than Apple did.
Yeah, I agree. I think this is the season of these kind of weird price action after earnings. Like, Facebook beat their earnings and I'm like, oh, this is good. And then I see the chart and I'm like 12% down. What's going on after market? So yeah, I agree with you. But I think the more looking at it, I think the basically sheer buyback is giving the confidence to the market for Apple, even though I agree with you, the earning numbers are not that like massive that it should pop by 7%. I think it's more the sheer buyback that they're doing that might be giving confidence to the market. Do you think that might be the case?
Sorry, can you repeat that question?
The share buyback, the 110 billion buyback that they're doing in the markets, do you think that might be the reason that the participants are getting more confidence in Apple?
Maybe, but look, to me, the only reason why a company would be buying back their own shares is when they don't have enough ideas to spend the money on research and development. I don't know what the last thing Apple innovated was. Maybe they finally changed the port on their iPhones to what everyone else uses in this world. I don't see any innovation coming from Apple. So buying back the stock is like the best thing they can do with their money. I'm not a big fan of companies buying back their stock. I don't see anything wrong with it. If they think the most money they can make is by buying back their stock, that's fine. But to me, that says they're ran out of ideas and they can't invest in research and development.
Matt, what are your views on Apple?
I think that. So I find myself agreeing and nodding along. I think that Apple is trying to tell the market that, look, we're not that hyper growth company from the early aughts and in the 2010s anymore. We're pivoting more to a value company and mature company, and you should expect us to return value to you instead of just burning it into every little single like project and research and development and idea. Like, we're not gonna. Okay, we seriously looked into it, but we're not going to do an Apple car. You know, maybe Tesla has too big of a moat. Maybe we realize it's just not in the cards for us. But instead of like just burning tens of billions into that, we're going to return that value to you as shareholder. I mean, Meta, you brought up Meta, and that's why you're right. It's so important to listen to the earnings calls and dig in past just the numbers, because I think the market was a little scared when Zuckerberg started talking about the tens of billions they're going to start pushing back into the metaverse. And no one liked that in 2021. And I think the market, the earnings was a big beat. And their metrics are great. And they're absolutely growing. And their valuation isn't frothy. It's decent compared to the other big mega techs. But as soon as you say like, and we're going to push tens of billions back into metaverse research and development, the market's like, didn't love it the first time, don't really know if it's going to work the second time. And so maybe that's why. Just my opinions.
No, fair opinions. Markets work on opinions. That's the best part about markets. If you don't have opinions, the market will stay in a straight line. So cool, makes sense. So those were the three major earnings. We had a few today, which are coming out or have come out. I'm not sure yet, but not so big. Let's move on to S&P and our lovely Nasdaq. Amazing price action, a nice decline into support areas, and then a very good bounce. You have been bullish on both of them. You have been saying you expect stock prices to go up higher. Are you happy with this minor correction, and do you think we have bottomed out over here with the NFP numbers coming out today, which showed a little higher unemployment? Lesser people employed not in the payrolls. A little bit more hourly wages, but I don't think that was majorly significant. I think the major significance was the numbers itself, the payroll numbers initially, and also how Jerome Powell came yesterday, and no rate hikes, even though inflation was kind of stagnant at a singular level or going up in the last two readings as well. So, what's your opinion on Nasdaq and S&P in the coming few weeks? Also, what you have seen from the numbers?
So just like with Bitcoin, I really like the bounce. I really like the way S&P bounced. I really like the way Bitcoin bounced. However, even though they're bounced really, really strong, they are both sitting right at resistance. And because they're sitting right at resistance, I have to be a little bit cautious and wait for that resistance to break. So the move I was expecting in Bitcoin was from 56 back to 62. Now we've gone past 62 into 63, but it doesn't change the fact that both 62 and 63 are resistance. In fact, I can stretch this resistance all the way to 65 if we're talking about Bitcoin. Now, if we are up above 65, I can then be very confident that we're not unlikely to go back below 60. But right now, because we're literally sitting at resistance, and for the S&P as well, the S&P had a huge gap today, and it's sitting right at the 50-period moving average on the daily. And if we look at the weekly chart and its moving averages, the weekly chart bounced right off its 20-period moving average on the weekly, which is good. Now, but once again, the daily is at a very critical resistance point. If we can break that resistance point, then I'm going to be super bullish. But right now, I'm just going to be hopeful that it can break resistance. But until it does, you can't assume that it will.
So according to you, the secondary might not be over if this resistance cannot be taken out. So that's a fair point. Matt, what is your opinion on S&P and NASDAQ?
Just like Bitcoin, I think S&P and NASDAQ, the meat of the move is over, and we're just looking at consolidation and speculating on how long it'll take. You're absolutely right. We got all sorts of resistance above our heads, and we shouldn't expect just to bounce right back to all-time highs. But everything that we've been talking about earlier really makes me feel confident that there's a floor in, that the bottom is solid. Like if we zoom out, and we don't even have to talk about individual S&P 500 companies. Just look at the entire sector. Over 75% of the S&P 500 has already reported, and over 75% of them have been reporting better than expected earnings per share. That's better than the 5-year average. That's better than the 10-year average. The labor market didn't report that it fell apart, and inflation didn't report that it skyrocketed. So really, like, there's not a lot for the doomer bears and for skittish bulls to hang their hat on and reasons to sell it all. So yes, I think it's a summer slump. Yes, I think we consolidate. But do I think the floor is in and the meat of the move is over? Yes.
Makes sense. So sell in May and go away. You can take a break. If you guys made profit in the first quarter, it's time to have some fun then. Cool. Moving on to numbers now, Tone. We both have been discussing this for the last 1.5 years. And it's been a great discussion about rate cuts. In the first three months, we have seen rate cuts being more volatile than the predictions of rate cuts being more volatile than crypto market itself. From having 6 rate cuts at the beginning of the year to 4 to 3 to 2 to 1 and now back to 2 and hopefully back to 3. I'm not sure what these guys are on, that they can fluctuate their thesis for the year so quickly in a matter of weeks. But after the numbers that came out today, NFP numbers, and the speech that happened yesterday, do you think we can expect 2 rate cuts this year, Tone?
No. As I've been saying for months and months and months, if there is a rate cut, it's a ceremonial rate cut for Jerome Powell to get all of these reporters and all the crazies off his back. But based on the questions that I heard in the speech 2 days ago, they were asking him if he's ready to raise rates and are higher rates necessary. So it looks like he doesn't have to appease anyone anymore to lower the rate, especially if the stock market breaks this resistance and goes higher. He has no reason to lower the rate. So I'm not expecting a lowering of the rate. Maybe I was expecting maybe 1, just for the sake of lowering it. But if people aren't harassing him to lower it, he's not going to do it. I think inflation is going to stay at above 3% the rest of the year. So the job market is going to stay strong. So there's no need.
Yeah, I mean, let's go through some of the comments that he made for the people who haven't seen his speech or who had some of the plans yesterday. So number one, so kind of a summary from his thing. It's unlikely that the next policy move will be a hike. So they are kind of saying that this question was asked, can we expect a hike? And he said, well, it's unlikely. He's basically being committed to saying that we are not in a stagflation state. So that means they are kind of saying that inflation might come down. It's not the new norm. And and also the most important point that we have been discussing, that political pressure might be one of the reasons that they might cut rate. So his comments were that the 2024 election is not part of Fed's thinking. So Tone, do you agree with this point? I don't, because I really feel it will be a political pressure on him to kind of have that one rate cut just for Biden trying to play his cards.
No, I do agree with his thinking. I think he hates the current administration, and he's not a fan of Trump. So usually, the election matters for a Fed chair. Usually, the government has a say in Fed policy. I think this is a bit of an exception, where this particular Fed chair couldn't care less, and so I do believe him when he says this. And also, considering how much money the government is printing and Congress is offering to every country under the sun, he wants to continue to teach the government a lesson and keep the rates high.
Matt, what are your thoughts on this?
I agree 100% with Tone. Even if Joe Biden wanted to, he has no leverage over Jerome Powell's head. So, and Jay Powell knows it. So, yeah, I'm sure he's gonna just do what he thinks is best, not only just for the country, but also he's definitely thinking about his legacy now. He's definitely viewing that future Nobel Prize for saving the U.S. economy, and it's gonna, in 5 or 10 years, and it's gonna piss every one of you off that they're gonna give him a Nobel Prize for saving the U.S. economy and the world economy post 2020. But they'll do it, and it'll annoy everyone. But he's thinking about his legacy at this point. I doubt he thinks that it doesn't even matter which president wins the election. I think he knows he's on his very, very last term, absolute last term. So he's just going out the way he wants to go out. And he's not going to listen or bend to Joe Biden. And if Trump gets in, he's definitely getting shown the door. So at this point, he's like, nah, it's how I want to be remembered and how the plaque looks on the wall.
Well, I mean, getting a Nobel Prize to save U.S. economy, it might be someone else. It might be someone related to U.S. Peace Prize instead of Economic Prize for now, I think. But yeah, hopefully that's not the case and he gets it. I'll be quite happy for that. Well, moving on to Japan, Tone. Japanese yen had a terrible time. For the time you went to Maldives, Japanese yen decided that it's going to go on its own route, and it started misbehaving. It started falling like anything. It has recovered in the last 2 days, and it's back down to 153. I think lower now. I have not seen the charts yet. Tone, what's happening with Japan? What are they going to do? And also, they came out with the news that they will be selling US treasuries to basically save the yen. What impact can that have on the US economy? For like a lot of countries have come out and said this, that they are going to be selling US treasuries, like getting rid of them. So how do you see it? What's the impact on the US for this, and why is Japan doing this? So yeah, your thoughts, please.
Well, Japan, I'm not a Japan expert, okay? Look, no country wants to see their currency go into massive inflation. Like, it's all fun and games at first. Oh, our currency is weaker now, therefore more countries are going to buy our goods, and so that's great for exports. So it's all fun and games at first, but then eventually, your population gets very, very angry that your currency is dying. And the Japanese finally made a pivot. The Japanese have just basically been doing whatever the U.S. tells them to do. but that has been, I guess, taken over by the UK and other European countries that are just doing whatever the US tells them to do. And the Japanese decided to finally grow a pair and tell the US, we're going to do what we want to do instead of what you tell us to do. And the Japanese have been the biggest buyer of US debt because China has stopped buying. Russia stopped buying a long time ago. China's been selling. And because of that, the Japanese had to pick up the slack. And the Japanese said, enough's enough. We want to. It's time for us to sell U.S. treasuries. They're trying to do anything they can to, bring their currency back into a little bit of strength. And they've kind of done it. I mean, the Japanese yen has rallied. It was all the way down to 160 yen per dollar. Fell all the way to 150. Not a huge deal, but something. A few percentage points there. And they're realizing their economy's in trouble, and they need to start looking out for themselves a little bit more than listening to the United States. Now, the United States has also taken Japan down to a very shitty path of picking a fight with the Chinese, which is also not in the Japanese's best interest. So hopefully, as they now start making their own decisions, they do the smart thing and get back on good graces with China, which is one of their biggest trading partners, which they shouldn't endanger that relationship. And that's all I can say about Japan. Their society is very honorable, and no matter what happens to their currency, the Japanese people will continue doing what they do. They're going to continue to live their lives and run very productive businesses. I mean, I've been to Japan. Their economy will just, continue to chug along, regardless of their 800,000 debt to GDP or whatever it is these days. So it'll just continue chugging along just fine.
Matt, any thoughts from you on this? Matt, you're muted.
No, not really. As a large U.S. trading partner, obviously we don't want to see Japan fall off a cliff. We do yes, okay, maybe in the short term it's not great if they're dumping U.S. treasuries to save the yen, but in the medium long term, it's the smart move. It is the smart move for them and for us, because they can't trade with us if they're capitulating, if their yen hyper inflates. So hopefully they right their ship. Hopefully they can ride through this volatility. But then that's also why there's all this pressure on JPAL, not only to please don't raise rates, but to, hey, just as soon as you possibly can, from pressure from other world leaders. Hey, just as soon as you possibly can. When do you think you can actually start cutting rates? Because it helps alleviate all these problems, all these cracks that are showing up all across the world. And if we rewind, this is kind of what we thought would happen. We wouldn't see cracks here at home first. We'd see all the other countries and trading partners in nations that rely on U.S. dollar trade, that are heavy U.S. Heavy trading partners with us and are constantly import export and building up this massive imbalance. And as we raise rates against them, it hurts them, and it makes their situation really tenuous. So we'll see. I hope they ride through this quickly, because we need them.
Well, thank you. That was a great point as well. So moving on to the last topic for the day. This is basically the M2 money supply. For the first time after 2023 January, we are seeing that the M2 money supply is getting back into positive. Now, I was looking at the charts and I saw some correlation. I can put that tweet out, Tone, so that everybody can have a look. And it was posted by one of our friends, so you will enjoy that. It was basically that once the US M2 money supply is back into positive, it kind of indicates a Bitcoin bull market. It has always acted like that. Obviously, when you have more liquidity, when you have more money available, the market is going to respond to that, and that is a good thing. First of all, can you explain to our listeners what M2 money supply is and what M1 money supply is? And then can you go a little bit in detail about how do you see this helping the Bitcoin markets or the crypto markets as a whole? You're muted, Tone, if you're speaking.
Good. Sorry, I already started speaking. So M1 money supply is basically the currency in circulation. And M2 is the currency in circulation plus things like savings deposits and money markets and all other things that is not really in circulation, but it's kind of just sitting there at the banks. And there was also an M3 money supply, which stopped being published. An M3 money supply was on top of that. It's the additional leveraged stuff and credit. And that was clearly getting out of control. So they kind of stopped publishing it, like it was never published to begin with. And so basically, M2 money supply is the current amount of money that exists that could be used to purchase goods and services. So that's kind of how to think of it. And the amount of money has always been rising, and it is always rising. There's more money in circulation coming in slowly. I don't really, but the U.S. economy has also been growing, and I don't know, I don't like to measure things against money supply. I don't know, maybe it's just me. Like the amount of the millions and millions of illegal migrants the U.S. has flooded into the country. I don't think the money supply is going up fast enough to account for 20, 30 million new people that have come in, right? So this money that's circulating in the economy, there's plenty of people that can use it. So assuming that speculative assets have to somehow correlate to M2 money supply, it doesn't make all that much sense to me. Speculative assets will go up over time. Money supply will go up over time. They're correlated by default. But assuming that one is going to go up based on the other in certain proportions, I never really cared about these ratios. I wish there were other speakers here that could fact check me on this, but that's kind of my view on it.
No, that's perfectly fine. Obviously, it's I think it plays a role. I agree with you that they both will go up over time because of the whole printing. That's why Bitcoin is there, because money supply keeps increasing, right? That's why inflation comes into the picture, because when the money supply increases, inflation's gonna go up, right? You have more money to spend. So I do agree with your point, and over time they should. But one sort of scenario that people can kind of link to is the correlation in the charts. Once the money supply kind of stagnates, the price of risky assets starts to fall, or we kind of start entering a correction phase of the market. So that's the only thing that I take away from that as well. But the reason I added this tweet is because I like the correlation that he tried to create. So it was very much interesting for me when I was going through it. I'm like, okay, I learned something new today. So that was great. So Tone, lastly, obviously, I don't want to touch on these topics, but these topics are not going away. All these countries are still at war. The wars are not over. And now there have been statements coming out of France, coming out of Britain. Again, every time we talk, they come out with a new statement against Russia and Ukraine side of things. So are they going to de-escalate? Do you think that they are making the right judgment call over here? Supporting Ukraine, giving money one after another. David Cameron today stated that they will give $3 billion, £3 billion a year until Ukraine needs it. Number one. Then the 80 billion package, I think, that was given by US to Israel and Ukraine. This money just keeps printing and keeps going there, and these countries are not doing the best for their own citizens. Do you think this is going to have a major impact?
One second. Yeah. So it's pretty clear there is absolutely zero desire from any U.S. politician, not any, but like 90% of U.S. politicians, there is zero desire to de-escalate either of the two current military conflicts. In fact, there is clearly a desire to start a third military conflict over in the Pacific. That is pretty clear to me. The amount of money they can print is technically infinite, and they are printing this money under the excuse that the money is going to U.S. weapons manufacturers. Therefore, it's creating American jobs, and they can continue doing this going forward. There is no reason for them to stop. In fact, actually, I haven't taken a look yet at the latest. The latest numbers should be out for last month's deaths. If you guys, if you have a couple of announcements, I can pull it up real quick. How we are compared to last year, because another month's data from the government budget office is out. So go ahead and do a few announcements. I'm going to look up that data.
Yeah, sure. So I think it was, what was it? 100 and no, not 100. You check it out. So yeah, till then, let me basically go through a few more news that have happened. We have covered Apple. We have covered M2 money supply. We have covered dominance. I'm just going through my list, guys. So please pardon me if I'm wrong. Oh yeah, one more thing that happened over the last week was that around 47,000 Bitcoin basically have moved from our short-term holders back to whales. I'll put this tweet back into the nest so that you guys can look at it. Also coming through, that's it, Tone. I'm done. The only announcement I have is bloody go to the Financial Summit website and get your space for the next Financial Summit, Tone. That's the only announcement I have. Yeah, guys, give him 2 minutes. Let him do his own research. The guy knows a lot.
That's fine. That's fine. Okay, so I already pulled up the new one, and let me pull up the one from a year ago in March and compare apples to apples. So March is the new one that is out. Came out April 30th for the month before. And we can compare them next to each other. And we can take a look. So this year, so far for the year, the government is in a $1 trillion deficit already going into March, at the end of March. Now, October is the first month. So it's October, November, December. January, February. So it's half a year. So half a year in, the federal government is $1 trillion in debt. And it's actually no different than last year. The year before, the government was also $1 trillion in debt at this time last year. So they're on pace so far, March 2023 and through March 2024. Yeah, on pace both for $1 trillion. I really thought we'd be a little more this year. It's a little surprising.
Maybe the money is not going in the right places. That's a discussion, right? That's the point, that the money is going more towards the war than it should go towards the welfare of people. Like, that's the only thing that we can take out from this, isn't it?
Yeah, I'm not really sure where they're saving money. The Social Security spending is up. Net interest spending is up. And national defense spending is about to, no, wait. National defense spending is up. So I'm trying to figure out, where are they saving money? Healthcare is down a bit. And Yeah, income security. I think that's the one. Income. Oh yeah, income security, big time. Okay, that is not $100 million savings. $100 million savings in income security, even over $100 million savings in income security, and that is unemployment checks. So the government is paying people less, and probably Medicare is likely down as well. 391, Medicare, yeah. So they've saved money on health, so they're paying people less if they're sick, and they're paying a lot less for unemployment.
Okay. Well, yeah. People who need the money don't get the money. That's as easy to say.
Right. Yeah, they're spending. Well, I mean, they have to spend more money on net interest because the interest rates are higher and the debts keep stacking. They're spending more on the war. Social Security payments always rise because of U.S. demographics. So the money has to be cut somewhere, and it looks like it's being cut from healthcare and from unemployment checks.
Cool. So, Tone, last question. Do you think any president, whether it be Biden, Trump, or XYZ, is going to come out and say, stop this war? Elections are coming, so somebody has to take a step, or all of them are on the same boat and all of them will go in the same direction?
No, not even Trump, right? Because, look, Trump was already accused being a Putin puppet when he had nothing to do with Russia. And Russia had nothing to do with the last election, with Trump's 2016 election. Russia had nothing to do with it. It's been proven Russia had nothing to do with it. And yet half of Americans believe that Russia stole the election for Trump. Trump was accused of being a Russian shill, a Russian, like a Putin stooge, which is why Trump armed the Ukrainians, which is something Obama didn't even want to do. So as much as Trump would like to say that, he can stop this war in Ukraine with a phone call immediately, I don't believe him. The moment Trump even tries to stop the Ukraine war, he'll be crucified in the public domain, on social media, on all the news channels, that he is just, doing what Putin is telling him to do. So Trump will not be able to stop the Ukraine war. Only Russia and Ukraine can stop the Ukraine war, because America will not be interested in stopping that war. And Trump is very pro-Israel. RFK is very pro-Israel. Biden is very pro-Israel. No matter who takes over as an American president, they'll be pro-Israel. I mean, 95% of American Congress is pro-Israel. It doesn't matter to the American Congress people that probably more than half of Americans are on the Palestinian side of this, not on the Israel side of this. But they have blinders on; they don't see it, and they're not going to get it. So I'm expecting zero attempt to stop either war from no matter who gets elected in this next election.
Well, that's it for today, Tone. Thanks a lot for taking out time. I know you just you had a very, very busy 2 weeks, and I hope you get some rest now. And we'll be having a chat again soon, most likely next week.
All right, sounds good.
Thanks a lot, all, for listening in. We'll be back midweek next week. Tone, any closing comments from you before you go?
No, that's it. Would have loved to hear Joe Kalasari's thoughts on Jerome Powell's little speech and what he's going to do with rates, but that's okay. We'll try to do this again next week. Thank you guys for listening in. Check out our morning shows on the Financial Summit YouTube channel. Check out the latest on Maldives. I'll be posting those videos soon. I haven't done it yet, but follow us on Instagram and also Twitter.
Perfect. Thanks a lot, Tone. Thanks for doing a little bit of advertisement for me. I should have done that when you asked me, but that's fine. I still have my job, guys. Don't worry. I'll be there with you on Wednesday. Talk to you soon, Tone. Take care.